Hey, what's up guys? Bill here. Welcome back to another Watchlist walkthrough. If you're new to the channel, this is a weekly segment I do where I review the trades I took that trading day. Oftentimes setups that I posted on Twitter the night before that you can follow along with. And if you're a return viewer and you haven't subscribed yet, please do. A lot of my viewers are currently unsubscribed. That helps support the channel and it makes it easier for you to find my content. So let's talk about the two trades I took today. That's all I did. I didn't do a ton. It's FOMC day. You don't want to overdo it and get yourself caught up in a mess here. So first thing I did today was play Microsoft calls on an IV flush. If you're not familiar with an IV flush, I do have a video on that you can check out. But essentially what we're trying to do is take advantage of rapidly decreased premium prices because of IV deflating after a stock has earnings. So prior to earnings, implied volatility increases because earnings days often make bigger moves than your average day, right? So they're pricing that into the contract premiums. When a stock has a certain implied move and it doesn't meet that move in either direction, that's going to crush the premium price because of the deflation in IV. And we can take advantage of that off the open and get really quick, big winning trades. All right. So on Microsoft, it had an IV of just around 60, which doesn't really sound that big. But it is about a 4% move implied. And it opened pretty flat, like about 0.5% down, maybe less, if I recall correctly. And that's a pretty big miss, right, on that implied move. So, for example, if you see this line here, this is the previous day's closing price. When Microsoft closed yesterday, I'm watching the 420 calls. That's what I played today because of this GEX here. And I thought, you know, if Microsoft really rallies today, these could end up in the money. That felt like a fair target. So I was watching those. When we closed at this level right here last night, those contracts were worth 515 bucks. All right. We opened here, not that far away, right? The premiums opened at $74. It's like a 90% decrease, just instantly. So anyone that was long, especially 420, even if they're in 415s, 410s, they're going to open these contracts freaking out because of the IV crush in panic selling, which is going to take the bad prices and just drive them down even more. And then we're going to be there to scoop them up at a great discount and then hopefully get price to play along. So, I went long because I went through the reports and I read some summaries and things like this about the earnings call, and everything I could find was very positive. And I just felt like there's going to be some people stepping in to buy here. It might not last all day. It might not last an hour, but if I can take advantage of an initial buyback with these cheap contracts, I'm going to try to do it. And we opened just a bit above yesterday's low, as you can see. So I felt like I had a decent little risk level here. If it started to crash through there, I could sell for maybe a 30% loss or something. Nothing too crazy. But as you can see, I had some good fortune and this just ripped up. And within 5 minutes, they were up well over 100%. Okay. That is what the IV flush is all about. You want to get in early and take advantage of that crush, you know? So as soon as I had those contracts pulled up, I'm looking at 510 bucks. Market opens and all of a sudden there's 75, 80. I'm like, holy crap. I'm slapping the ask. I'm getting it as soon as I can. And I want to take advantage of this move if I get it. And we got it. Okay. So this is just one of those types of trades where you can risk maybe 40% loss, even 50% loss. And it's not a big deal because the upside is several 100%. I believe these went close to 400% at the top of the day in less than 10 minutes. Okay. And that's what that play is all about. Again, I have a video from back in the day on it on Netflix. If you want to learn more about the details of IV flushes, check that out. But you can always leave a question too and I'll help you out. The only other thing I did today was SPY calls during FOMC. And you may think, wow, calls? How did you make money on that? The market tanked. Yeah, it did, but not at first, or at least not the way I played it. And I'll show you what I'm talking about here. This is a data play, thanks to Edgeful. If you guys aren't familiar with Edgeful, it's just a data analysis platform for the market. It's something I've been using lately that I'm finding a lot of use in. And this is another great example of that. They have FOMC performance data. And as you can see here on SPY, going back, 2 years, when the initial reaction to the FOMC announcement, so that 11 a.m. Pacific or 2 p.m. Eastern announcement is negative, what tends to happen is a half hour later, when Jay Powell starts talking, we get a nice bounce back. Okay? So I was just sitting back waiting to see what the initial move would be. You can flip this and see what happens when it's a positive initial reaction, right? But we got a negative one today. So that's what I cared about. All right? Let's flip to the 15. Oh, I'm on it. Good. All right. 15-minute. Here's your initial reaction. We opened up here when the announcement came out and we sold off. A little bit of a buyback, but, a dollar move down in that 15 minutes. And then we know that Jay Powell always starts talking 30 minutes after this announcement. So in this 15-minute time frame where there's a little bit of consolidation going on, I'm looking to get in and buy some calls to see if I can use this data to my benefit. What do we got here? We've got a big pivot here, dark pool, billions of dollars of dark pool I knew I wanted to use as my risk and support. So once this candle, which is high volume because of the FOMC announcement, makes a low, I'm looking for my entry, and it comes back and tests it again. So as soon as we come back and retest this low from this high volume candle, I get my calls. And I buy 1 day time because I want to be able to take a little drift if it keeps drifting down to my risk or even maybe a little bit below. I just want to survive until 11:30 or 2:30 Eastern time when he starts to talk, because that's the whole thesis of this trade, is the data showing that we get that pop back on the days where we have initial sell-offs. And I have my support here. I'm just using a nice combination of TA and data, and look what we get. As soon as he starts yapping, $2 stick, okay? Those went over 100% in 10 minutes, 15 minutes. It's, again, guys, you don't have to do a lot to have a big day. I had a 20% day on 2 trades that lasted a total of 30 minutes combined. All right. And you don't have to be right for long. Okay. In both trades, eventually, if I was stubborn, they would have went red on me really quick. Look at how bad we sold off. You go back to Microsoft, the pop lasted for 15 minutes and then it sold all the way back off again. Day trading, you don't have to be right for long. You just have to have a great plan, be patient, wait for it to happen, take your entry, know your risk, know your targets, and execute. Okay? Simple as that. So if you guys are interested, this site, again, it's called Edgeful. They do offer a 7-day free trial. I'm going to put a link down in the description for you if you want to check it out. But they got a bunch of useful stuff. I have a video walking through some of my favorite parts of this site. If you want to check that out to learn more before you check it out. But yeah, hopefully that helps, guys. If you have any questions, leave a comment or find me on Twitter and I'll help you out.